Our stock of the day is NextDC. In fact, it shares, they're up more than 9% this morning. And that's its highest level since April last year. And after recent customer wins, the contracted utilisation rate, which measures the extent to which data centre servers are being used, that's risen by 43%. Its new S3 data centre in Sydney has benefited most, now at 46% of total planned capacity there. So obviously business is good for NextDC. I guess the question is, can it last? Carl, how do you look at NextDC? I guess as these demand for data centres increases.
Yeah, look, no doubt what we're doing right here is going to be recorded and put on video on demand. It needs to be stored somewhere, and stored for however long. It's got to, it's got to sit somewhere in ones and zeros, and that's where NextDC comes in. And that's, not just obviously what we're doing here, but all sorts of important government organisations that are storing their data, companies, etc. And it is, ubiquitous, I guess, with this, digital revolution and movement of data to the cloud. So big tick there. If you look at the last 3 or 4 years that we've had earnings for them, not making a net profit yet, but EBITDA positive, we're sort of 20% compound annual growth rate. So just giving viewers an order of magnitude of what the growth is in here. They still need to turn a profit. Obviously, it's no point having great increase in revenues if you can't get a profit out the back end. That will probably happen. Not this year, obviously this year's nearly finished. Outside chance for FY24, but probably in FY25. And then you're looking at about 750 times earnings is what you're paying. So yes, there's great growth. Then we move to the stage, well, what are you paying for that growth? And it is substantial. FY26, if all goes to plan, because the growth trajectory is, bottom left, top right, that comes down to 100. But still seems pretty high for me for earnings you're going to get in a few years' time. So I can't say, based upon the valuation I ran on this, it's particularly cheap. The brokers are saying it's pretty much fairly valued. They've got a price target that's around 3 or 4% higher than the current price. Looking at the chart would sort of agree with that. I think around about 12 to 12.20, we're going to see some significant supply coming into the market because we've seen significant supply around this area in the past. On the basis of, I think it's pretty fully valued. I think the brokers are thinking it's probably pretty close to fully valued, and we're at the chart resistance, and today's candle isn't looking great. I reckon you can trim some here. It's not an all-out sell, because otherwise the trends are pretty good. Short-term trend is up, long-term trend is up. The candles, price action, all fine. But I like to take some off the table when we get a big pop-up like this, especially when we're hitting those big supply levels. So trim for me, Andrew, is typically 1/3 of the existing position.
1/3. Okay. All right, Henry.
Is that a sell then?
Well, it's a semi-sell.
It's a semi-sell. Okay, well, we can do semi-sells. I tend to agree with Carl, I got to say, that if it's going to be a semi-sell, it has run hard. There is kind of a big short position in this one. About 7% of the stock is shorted. So we have had this knee-jerk reaction higher today on the back of those utilisation rates at Macquarie Park at S3, which is looking good. I have to say, when you think about this company seems to have been around forever. It's been a long story, hasn't it? Data centres, and yet to be profitable. I think that's kind of telling. These are capital intensive businesses. They cost a lot of money to run, to heat, or rather to unheat, really, to cool. And that's clearly taken its toll in the last period of time. The stock has recovered really, really well off its lows around $9. And it is going pretty well today, up 9% today. But I would be with Carl, taking some profits here. There is this sort of short squeeze, I suspect, happening today. Good numbers though, good utilisation, so that's important. But I think it's recovered in line with tech stocks, in line with the market. But I think from here it gets harder. So I'd be looking to semi-sell or trim, or at least take some profits here. 12.15, 12.20 looks to be a good place to take some money off the table.
All right. So both in agreement essentially with NextDC, take a bit of money off the table there, trim. Carl looking at 1/3 of what you may have there. All right.